Okay, dear students, in today's session, you are going to learn the journal entries which are generally passed by the company as an accounting procedure while issuing the shares to the public. Okay, once the share application money is collected by the company, for that it pass one journal entry. Try to understand here. You are going to learn journal entries in the books of company. First one is for receiving application money. For receiving application money. Assume company issued 10,000 shares of rupees 100 each and this 100 is planned to collect like this as application money rupees 20, as allotment money assume rupees 20, as first call rupees 30, and as second and final call rupees 30. Assume these are the installments set by the company. Rupees 100, that is the face value, company is planning to collect in 4 different installments. Okay, first thing is rupees 20 is set by the company as application money. It means what? If a shareholder is in need of shares, when he demands for shares or when he applies for shares, with that application he has to send rupees 20 per share as application money. I will take the example. Here Mr. X is planning to purchase 1500 shares. 1500 shares. Therefore, he has to send how much? Rupees 20 per share as application money. Therefore, it comes to rupees how much? Rupees 30,000. Next one is Mr. Y. Assume he applied for 500 shares. Therefore, he sent application money of rupees 10,000. 10,000, that is rupees 20 per share. Next one is Mr. Z. He applied for 1000 shares and he sent rupees 20,000 as application money. See, this is the way how the applicants are required to send the application money along with their applications. Okay, fine. Here 10,000 shares are issued by the company and par value or the face value of the share is rupees 100. This the company has decided to collect in 4 different installments. First installment is the application money. See, when the application money is collected by the company, journal entry is bank account is to be debited. Try to understand here. Bank account is to be debited with the amount of application money. Next one is to share applications account. Share application account. See, 2 accounts we need to open here. One is the bank account. Next one is the share application account. Here, bank account is debited because here cash flows into the business. Therefore, here bank account is required to be debited. Okay, what is the amount of application money? Just you see 10,000 shares. Assume that all the shares are subscribed by the public. Here one important thing you have to remember. Sometimes issued capital and subscribed capital may be different. Sometimes issued capital and subscribed capital may be the same. Here I am going to assume that all the 10,000 shares have been subscribed by the public and the application money is duly collected by the company. What is the application money? Rupees 20 per share means for 10,000 shares, how much it comes? Here I write 10,000 shares into rupees 20 per share. It comes to rupees how much? 10 lakh. Okay. 10 lakh is the capital which the company is planning to collect by issuing the shares. How many shares company is planning to issue? 10,000 shares. That is why here by selling 10,000 shares, company is planning to collect rupees 10 lakhs. Out of 10 lakhs, see now 2 lakh is already collected in the form of application money. How much it comes? 10,000 into 20. 10,000 shares into rupees 20 per share is collected in the form of application money. It comes to rupees how much? 2 lakhs. Therefore, whenever application money is collected, that amount is to be written here, rupees 2 lakh and rupees 2 lakh. Very simple thing. Very simple thing. Assume that if the excess application money is collected, if excess application money is collected, in that case, what the company will do? Company will return the excess application money to those applicants whose applications are rejected. Okay. You assume that here Mr. X had applied for how many shares? 1500 shares. But only 1000 shares are allotted to Mr. X. How many shares are allotted? Only 1000 shares are allotted. If 1000 shares are allotted, for 1000 shares, how much application money will come? 1000 shares, 1000 into rupees how much? 20. It comes to rupees 20,000 only. But he has paid how much? Rupees 30,000. Here extra money received from Mr. X by the company is how much? Rupees 10,000. Okay. But here shares are allotted to Mr. X. Therefore, here X is the shareholder of the company. After allotment, again he has to send the allotment money, right? Allotment money is how much? Rupees 20 per share. Again, he has to send how much? Rupees 20,000 as allotment money. But in this case, already 10,000 extra application money has been sent by Mr. X. Therefore, when the shares are allotted, he is not going to pay again rupees 20,000. Instead of that, how much he will pay? He will pay only rupees 10,000, because 10,000 he will send and 10,000 is already there with the company. Total allotment money comes to rupees how much? 20,000. This is the way how the excess application money is adjusted towards the next installment. But this adjustment can be made only when the shares are allotted to the applicants. In case if the shares are not allotted, shares are rejected, if the application is rejected, in that case the amount will be returned to the applicants. Assume here Mr. Y, he had applied for 500 shares and rupees 20 is the application money he sent along with the application. How much it comes? Rupees 10,000. But here no shares are allotted to Mr. Y. Assume no shares are allotted to Mr. Y, means Mr. Y is not going to be a shareholder of the company. What the directors will do? Directors will return this rupees 10,000 to whom? To Mr. Y, because this is the rejected application. Only the rejected applications money will be returned to whom? To the applicants. But here once the applications are accepted, on such applications, if any excess application money is collected, that will be kept with the company for the adjustment of next installment. Okay, fine. Here I will take the next entry. You see here, for receiving the application money, what journal entry we have to pass? Bank account to share application money. How much? 2 lakh, 2 lakh. Actual amount is 2 lakh, 2 lakh. But here, how much amount the company has collected? Assume that the company has collected excess money of rupees 20,000. You assume here rupees 2 lakh 20,000 is collected by the company. 2 lakh 20,000. What is this 20,000? 20,000 is the excess application money collected by the company. I hope you are understanding this one. 20,000 is the excess application money. From whom the company has collected this one? Just you see in this example, Mr. X has paid rupees 10,000 extra money here, because actually he was planning to purchase 1,500 shares, but the company allotted only 1,000 shares. But for 1,500 shares, as per the company procedure, he had sent rupees 20 as application money. Therefore, it came to rupees how much? 30,000. But on 1,000 shares, actual amount comes to rupees how much? 20,000 only. Therefore, here 10,000 excess application money is sent by Mr. X. This rupees 2,20,000 has included 10,000 excess money collected from Mr. X. Okay, this excess money will be adjusted towards his next installment. Here next installment is how much? Rupees 20 as allotment. After receiving the letter of allotment, Mr. X has to send rupees 20 per share, that is on 1,000 share, as allotment money. In that case, that excess money will be adjusted. Just now I explained that one. Next one is, What about the other 10,000? See, in this 20,000, 10,000 is the amount of Mr. X that is not going to be returned by the company, because company will keep this amount to adjust towards his next installments, because X has been already allotted shares. Next one is, again further 10,000 is there. You see, Mr. Y, he had applied for 500 shares. For that, application money sent by Mr. Y was rupees how much? 10,000. But his application is rejected. Because of that reason, this rupees 10,000 is to be returned by the company to Mr. Y. Very simple thing. This amount will be kept by the company with itself in order to adjust the next installment money. Next one is, here this rupees 10,000 will be returned to whom? To the applicant. For that, what journal entry we do? For returning excess application money on rejected application. That you have to remember, rejected applications. If the applications are rejected, then only amount will be returned to them. For that, we have to pass opposite journal entry, because cash goes out from the business. Here we are making the payment. Here company is making the payment, I mean what you call returning the amount. That is why here what journal entry is to be passed, we have to reverse the above entry. Share application account is to be debited. Share application account is to be debited. How much amount we are returning here? Only 10,000. To whom we are returning? To Mr. Y. Okay, fine. Next one is here to bank account. To bank account, rupees how much? Rupees 10,000. This is the second journal entry. This one is for receiving the cash, receiving the application money. This one is for returning the excess application money to those whose applications are rejected by the company. This is one thing. Next one is third journal entry. Try to understand here. Here whatever application money is there, that will be transferred to share capital account. For that, what journal entry is to be passed? For transferring application money, for transferring application money to share capital, to share capital. Here share capital account is to be credited. Here share application account is to be closed. Share application account is to be debited with the amount of rupees. How much? Share application account, total application amount we have to take here to share capital account. Okay, to share capital account. For receiving, just you see, the other entries are also same. For receiving allotment money, here I remove this one, application money. I put here allotment money. Allotment. Here allotment money comes to rupees how much? Rupees 2 lakhs. Here rupees 20 per share is the allotment money. Therefore, when share allotment money is received, in that case, what journal entry is to be passed here? Bank account is to be debited and share allotment account is to be credited. Share allotment account is to be credited with the amount of share allotment money. Assume rupees 2 lakh and rupees 2 lakh. Next one is, after this, here share allotment money is transferred to share capital account. For transferring share allotment money to share capital account, what journal entry is to be passed here? Share allotment account is debited. Share allotment account is to be debited to share capital account. Share capital account. Here assume here rupees 2 lakh is there, 2 lakh and rupees 2 lakh. In this way, we have to pass the entry. Okay, now for adjusting excess application money towards the share allotment money, what is the meaning of this? If excess application money is already given by the share applicant, in that case, that excess application money will be adjusted towards his next installment. Assume first installment is application money, and the second installment is allotment money. Okay, allotment money. Just now I took the example of Mr. X. See, he had applied for how many shares? 1500 shares. Therefore, he sent rupees how much? 30,000 as application money to the company. But company allotted how many shares? Only 1000 shares were allotted. On 1000 shares, application money comes to rupees how much? Rupees 20 per share, means it comes to rupees 20,000. Instead of 20,000, he sent rupees how much? 30,000, because he was expecting 1500 shares, but he is allotted only 1000 shares by the company. But whatever excess application money he has given, that money is not returned to Mr. X, because because here X is required to pay the next installment money also. What is the next installment? Allotment money is there, then for first call is there, second call is there. But here second installment, that is allotment money, assume that comes to rupees 20,000 again, because 1000 shares are there. Therefore, on 1000 shares he has to send how much? Rupees 20 per share. It comes to rupees 20,000. But now when the shares are allotted, Mr. X is not going to send rupees 20,000 to the company. Why? Because already he has sent rupees 10,000 as excess application money. That is why here rupees 10,000 will be adjusted towards this allotment money. Therefore, here Mr. X will send only rupees how much? 10,000 to the company, and 10,000 is already there with the company. Now rupees 20,000 comes to the allotment money of Mr. X. Therefore, here whenever the adjustment is made to this record, excess application money is adjusted, we need to pass the journal entry as share application account is to be debited. Share application account is to be debited, and to share allotment account. Share allotment account. If cash is received, what journal entry do we pass? Bank account to share allotment account. Here, bank account to share allotment account. But this time, company is not collecting rupees 10,000 from Mr. X. Therefore, in order to adjust this excess application money, this journal entry is to be passed. From where this rupees 10,000 will be taken? From the application money. Therefore, share application account is to be debited with the amount of rupees 10,000, and share allotment account is credited with the amount of rupees 10,000. This is the adjusting entry which we need to pass in case if there is any excess application money lying with the company. That amount is to be adjusted by passing this journal entry. Very simple thing is that. What is to be done here? Share application account is to be debited and share allotment account is to be credited. And in the similar way, the next one is whenever the call money is received, for call money received, what journal entry is to be passed here? Simple. Bank account is to be debited. Again, cash comes into the business. To share call account. In case if they mention first call, second call, and final call, that we have to mention here. Share first call account. Share first call account. Next one is this amount is transferred to share capital account. For transferring share call money, share call to share capital account. Share capital account. What journal entry is to be passed here? Share first call account is to be debited. Share first call account is to be debited, and share capital account is to be credited. Whatever money comes, whatever money is there, that is transferred to share capital account. Okay, in brief, try to understand the journal entries like this. Whenever application money is received, journal entry is a bank account to share application account. Next one is whenever allotment money is received, bank account to share allotment account. Next one is whenever call money is received, bank account to share call account. That is first call, second call, final call, whatever it may be, you have to write that one. Next one is when the amount is transferred to share capital account. For that, what we have to do? We have to credit share capital account, and here application money is transferred. That time journal entry is share application account is debited and share capital account is credited. When share allotment amount is transferred, share allotment account is debited and share capital account is credited. When call money is transferred, call money account is debited and capital account is to be credited. You subscribe the channel and transfer the video even to others so that they can get the benefit of this. Thank you.